Hello, everybody. Gbenga Olatunji here. So, putting every element of risk under microscopic look is key to the success of risk management implementation, and we'll be looking at risk management monitoring today, and items we'll be looking at under it: the role of risk committee of the board of directors will be looked at. We must look at auditing, risk auditing, and how to perform risk auditing. The first steps to be taken, we are going to look at the role of risk managers and the general and the broader and the specific role of the risk managers. It is important to let us know that risk management does not have widely accepted approach to management of risk, as every organization carries unique risk. Its HR risk will be different from the financial risk of another organization, will be different from compliance risk from another industry. So every organization has myriad of risk elements that vary directly to themselves in comparison to other organization or industry, like health and safety risk. So there is no generally accepted approach to risk management. Nevertheless, there are things that are common. There are procedures and processes that are common. Like, we must all identify our risks in every organization, in all of our organizations. So we are going to look at the role of risk managers, and please let us establish one thing, that the role of risk managers are primarily to provide risk information, information about risk compilation and the like. Two, to assist and to advise, and also to create and improve risk awareness in our organization. These are key roles of risk managers: to encourage the adoption of sound risk management practice. And everything said, doing it do not depend on them alone. Doing it, we need the board, we need other managers to support. We need the entire organization to support for it to actually work. Other roles of risk manager, apart from the earlier mentioned critical roles, may include these: helping in the identification of risk. Don't forget, this is the first step in risk management. We must identify our risk so we can give risk managers this responsibility on our behalf to identify risk for us and compile it. Don't forget, one of their critical role is to provide information about our risk. Also, to establish tools that can help with the identification of risk. How are we going to identify our risk? How does risk identification work? Also, the model and methods of assessment and measurement of risk, they can help us in determining methods to use in measuring our risk. All these have been initially mentioned before in different videos. Collection of risk incidents. and risk reports. Departments and functions could report to risk managers, assisting the HODs and line managers in review of their reports, especially internal audits could do this. Don't forget that internal audit can stand in the gap as risk managers and auditing risk too. They too, and I mean the risk managers, should prepare reports about risk to the governing body, that is the board of directors too, so that they too can be aware of the risk that the organization is carrying day in, day out. It could be monthly reports, it could be quarterly report, biannual reports. Monitoring best practices in risk management also belongs to them, and they can assist us in this, and they can encourage the adoption of best practices within the entity. These are some of the work. How effective risk managers are going to be in our organization and risk management will depend on factors like general participation of the organization, the culture of awareness within the organization, and the participation of the board of directors in ensuring that risks are well managed and every responsible officers are doing what they're supposed to do in order to monitor and overcome impacts of risk on our businesses. The role of risk committee of the board of directors primarily is to be a review agent to the organization, fulfilling the code of corporate governance, that is that the risk management belongs to the board of directors. So because the BOD has a lot of other functions that they are responsible for, so they can delegate and give authority to some other committees to do some certain things on their behalf. So role of risk committee, they are given the authority, but not the authority to decide on behalf of the organization about risk management critical decision, but they are to review and report back to the board so that the board can take the decision. Please, we should not forget this. They have the authority to work on behalf of the board, but not to decide about the risk eventually, how it's going to be managed. The board should decide. So therefore, strategic risk and business risk management, especially in form of collation of reports, in form of information gathering and reportage back to the board. Operational risk, financial risk, compliance risk, environmental risk, all these must be scanned. That is, our environment should be looked at, scanned through and report back to, collect different risk information from different departments, put them together and report to the board for decision making about the risk and risk elements of the organization. So risk managers can be part of this committee. Internal auditor can be part of this committee. Some managers, especially high risk area managers, could be part of this committee of the board of directors. Risk monitoring is for the purpose of identification that and that the processes of risk management are in place, the procedures are in place, the internal controls are in place and are working effectively to detect risk on time. that risk management systems are working and that they are effective. Changing in the impact of risk that we've identified before also is important, and that they are being monitored. The impact level, when the level of impact begins to change, monitoring should easily detect such developments. Failure in control of risk. Risk monitoring should be able to discover it on time and investigate it. Weaknesses generally in risk management processes should be identified and corrected because risks are being monitored. These are purposes of risk management monitoring. Let us quickly look at how to perform risk auditing. When we want to perform risk auditing, primarily we need to be able to lay our hands on risk factors of the business. So that means that identification is key. You must be able to identify risk, and that risks are documented by the managers of that department in which risk audit is being carried out. So the first step in risk audit should be to identify what the risks are in particular situation, the strategy, the procedures or systems. The risk change continually in nature. So the impact, we must be able to monitor it. Existing risk is possible for them to be disappearing and new risk coming up and showing up. So it is therefore essential to identify what the current risks are, especially for the companies that operate in volatile businesses and business environments like the stock markets, financial markets, loan, and the like. Then, and after that, we must be able to do assessment of risk. So the first stage is risk identification. Second stage is risk assessment. So the probability of an adverse event occurring and the impact when they occur, we must be able to measure it as auditors. We must be able to assess their impact, assess their frequency on behalf of the organization. And having measured it, we need to review. And this is the next stage in risk auditing. So we must be able to look at controls that are in place to manage the existing risk and how effective their outcomes are and have been. And we must be able at the end of the day to prepare a report of the identified risk, of the assessed and measured risk of our risk audit review. So these are the four stages in which risk auditing must pass through: identification, assessment and measurement, review, and reportage. We will be looking at business plan and feasibility study after this tutorial. From Gbenga Associate, Gbenga Olatunji is my name. Don't forget to click the notification button and subscribe to us. We are value to life. We are value to your business.